Today in the crypto space, we see the negativity continue. Bitcoin down approximately 4% below the $65,000 level, and Ethereum below the $3,500 mark, down approximately 7%. While the rest of the crypto space, the altcoins, follow these heavyweights to the downside. We have a few retracements and a few fire sales to be had. In today's video, I want to talk about the general market. I want to use Bitcoin as a leading indicator, but more importantly, I want to do a quick update on a project that I want to scale into, but I'm only buying the dips, and that project is called Toncoin. So you know what? Let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins. Looking for opportunities, whether we go up or down, bearish or bullish, it doesn't matter. All we want to do is stay one step ahead of the market so that we can capitalize on any of the volatility. And if you appreciate the strategy, subscribe to the channel, click the bell so you don't miss out on any of my future videos, including the live streams at 7:30 Eastern, where we talk about crypto news and price action. Guys, if you have any projects you want me to cover here on the channel, feel free to let me know in the comment section below. You can hit me up on the socials. The links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. All right, guys, let's begin by looking at the overall crypto space. We'll take a look at the top 100. Then we'll take a look at Bitcoin as a leading indicator. What is Bitcoin showing us for this market? And then we'll touch base on Toncoin. Toncoin, obviously one of the major gainers in this bullish rally that we've been having for the last little while. And then, you know, we want to be buying in on the bottoms, not the top. So the question is, are we going to get that opportunity to be buying Toncoin on the cheap? All right, so let's begin. We can see that the overall market cap in the crypto space is holding quite steady. You know, it's still at about $2.5 trillion, a bit of a dip in the last little while. We see the trading volume looking a little bit, you know, indecisive. However, it did make a slightly higher high on the previous, based on the previous high. So it's not bad of a scenario. In the last little, in the short term, like in the last, I would say 24 hours, we have been having a lot of negativity, guys. We're seeing a bit of a sell-off, and most of the sell-off is coming from the Ethereum narrative, given the fact that, you know, maybe buy the rumor, sell the news type of scenario, right? We've got an Ethereum ETF listed already. Bullish overall, bullish, really good here for mass adoption and all that good stuff. But the reality is that people did scale in early on ETH in preparation for the ETF, and we've been seeing a bit of strength here on Ethereum in the last little while. Nothing major, I'll be honest. I expected a little bit more, but the reality is a lot of people did scale in early on Bitcoin and Ethereum based on this idea that we were going to get this ETF, and here it is, you know, buy the rumor, sell the news. Now, we have been seeing a bit of a sell-off. Now, I'm not going to say that it's just based on buy the rumor, sell the news. It could be a little bit of a fear, uncertainty, and doubt. And then people start thinking about, what about if it is a sell the news event? Then they start, you know, increasing and compounding that fear. The reality is the charts have been showing us negativity or a divergence to the downside for the last 3 days, if not more. So what's really important to understand is that when you get confluence with the charts and confluence with sentiment, confluence with, you know, things that are happening like an ETF with that news that just came out, you know, a lot of that confluence does, you know, eventually result in an exponential, you know, impulsive move to the downside in that case, right? So we really have to understand that right now we're just in a sell-off mode, right? And I wouldn't be too fearful here. Ethereum, Bitcoin, the rest of the altcoins are coming down on the 4-hour time frame, back testing good levels, no real major change of character to the downside. With that being said, guys, all we're looking for is a confirmation low, a higher low. So before we talk about charts, let's just get an idea of what's happening here, if it's worth, you know, buying the dips and accumulating. We can see that a lot of the altcoins are down approximately 5 to 10%, give or take, which is good because I do like double-digit dips. Those are my favorite type of dips to buy. When we get into the double digits, I start to look at, you know, this is a worthwhile DCA opportunity. However, guys, if I've already DCA'd relatively close by to the current price, it's not really valid. It's not really enough of a dip to DCA to drag my average cost down, right? So I keep in mind, what I do keep in mind at this current moment is what projects haven't I scaled into that I would like to have either more of or some altogether, because maybe I don't have any. Well, Toncoin is one of those that I want more of. I have very little. I wanted to buy more. The market hasn't given me that opportunity, and the market may never give me that opportunity. But definitely Toncoin is one that I appreciate. Now, I do understand it is a large cap. We're talking about $17.5 billion market cap, which is massive. Okay, it's big. It's a big market cap right now. So we have to understand that Toncoin as an ecosystem project, reality is we are depending on the ecosystem itself to gain more growth in order to provide more utility and to provide more, obviously value to the Toncoin network. But however, guys, we have to understand that ultimately a bit of exposure in these stable type of projects that have stability, strength, and so on, and less volatility is always healthy to diversify your portfolio. So I'm looking to scale in a little bit more. I wouldn't mind a little bit more Toncoin, and I wouldn't mind either to actually be looking in some projects that are within the Toncoin ecosystem to diversify via market cap as well. So I'll be looking for smaller market cap projects. So this is what we're going to look at today. We'll talk about the Toncoin chart to see if the market may be giving us an opportunity to scale in at lower levels. Right now, Toncoin is down approximately 6%. Let's keep on going down here. Cardano's also down. AVAX coming down. But you can see, look, even AVAX, if you use AVAX as an example, it's down 10.5% more or less. And you can see it didn't even make a lower low, right? It's still within structure. It's actually getting a bounce right now. So it's not too bad. The market, of course, is red. And this is what happens on the shorter time frames, is the lower time frames definitely, invoke a bit of fear. While big picture, it's hard to really, visualize what's happening big picture, but it's safe and fair and valid to zoom out and check out what's happening on the daily. The daily's still looking good. The weekly is okay. The monthly is even more bullish. So big picture, we're doing great. Right, so we have to understand that the peaks and the valleys on the shorter term time frames can be traded, and that's what I do here on the channel, guys. I trade those peaks and valleys on the 4-hour. I scale into bigger positions for the daily. I accumulate on multiple time frames, and this is how I prepare my portfolio for the bull run. We see Near Protocol coming down. The question is Near Protocol hitting horizontal support? And I do see that Near Protocol on the Near Protocol chart is starting to look really good for a potential DCA opportunity. And if we keep on going down, we are either going sideways on a lot of these projects, even Polygon, for example. What really happened? I know we're down 7%, but so what? Look at the price action, stable, going sideways, pretty good. That's all we're doing. That's all we can think of at the current moment, is that at least the price is neutral, right? So neutral is good in negative momentum, and we have FET coming down. We have XLM actually getting a little bit of a bounce, a bit of relief. Monero relief. Stacks came down significantly more than expected, made that lower low, but we're getting a bit of a bounce. I really don't like this lower low that's happened here for Stacks, unfortunately. It could be a scenario where we do come down for another lower low again, lower highs, lower lows. You get what I mean? Trend is your friend. And as we keep on going down through these charts, you see Render, double bottom, maybe dead cat bounce, maybe continuation to the downside for Render. Render has been a great gainer, guys. We have to understand Render has done very, very well. $2.5 billion market cap all of a sudden. Right now, what we can expect is that Render could be just, in a scenario where the market could be taking a bit of profit, maybe even going sideways for a little bit before we get another continuation to the upside. Render is bullish. People are very bullish on Render. People are not going to be selling their Render bags very, very easily. So keep in mind, Injective, a bit of a dip, 7%, and you can see overall the market's down approximately 5 to 10% on average. Lots of 10% dips everywhere. Lots of red, but a lot of sideways, guys. A lot of sideways. It's still okay. Like Thorchain Rune, for example. Look at it. It is down 10% right now, but look at the structure. No, nothing to fear. Structure is looking good. Sideways, sideways, sideways. So as long as we're going sideways, as the market is, showing negativity on momentum, we're okay. Any dips should be bought, because when we do get the continuation to the upside, the ones that have been going sideways are the ones that are generally going to do much better, because they're showing strength during negative momentum. So not bad here. Gala dipping down 8%. Helium still grinding to the upside, although it is down 6.5%. But you can see doing pretty good. Athena doing okay. down 12%, but you can see overall structure is looking good, and the overall market is doing fine here, guys. The overall market is okay, but on the 4-hour time frame, guys, there's definitely opportunity. All right, guys, let's jump into the charts. I know you're to talk about price action, so let's take a look at Bitcoin. What's going on with Bitcoin in the last little while? Bitcoin is bringing down the market, Bitcoin and Ethereum as well, of course. So Ethereum has a lot of influence as one of the second largest cap project out there. If the two heavyweights come down, the rest of the market is coming down. But we got to be real here. This dip is based on lower time frames. Let's look at this in a little bit more detail. Guys, if you've been following the channel for the last, I would say 3-4 days, congrats, because at least you were able to, front run or at least position yourself in some sort of way to prevent or to prepare your portfolio or even your emotions, in this case, because really what we've been getting is signs of negativity all into this area, right? And I made this very clear. Now let's stick with the daily here for a second. I just want to be clear on the fact that we changed character, which was really nice. We broke above this high, and now we made this higher high. Beautiful. Now do we come down and make a higher low? That's what I'm looking for, is a higher low. If we come down for a higher low, guys, I'm quite content with that, because it could be that we make a higher low, confirmation low, then we go up for another higher high, and we can get a bit of a pivot point. However, guys, if ultimately we just go sideways here for another month or so, guys, we could be, waking up via September time. September could be the timing of where we start to get a bit of bullishness. Now, the daily is still looking good. If you look at momentum, the momentum oscillator finally got that mean reversion close up, in the sense that the momentum or RSIs or any other oscillator at this current moment should have, basically reached this moving average right around this level. You can see the yellow and the purple together, which is great. Unfortunately, we're still seeing the orange line push down, which is the volatility. So you can see that the volatility came in right here and gave us a great indication. Be careful. You do see that the momentum is still trending upwards, but the volatility is pushing down, and this is what we're getting here. Now, I'm still daily time frame bullish. The trend on the momentum is still upwards, as you can see the yellow line. Although the momentum did come down and get back to the yellow line, and now we kind of crossed over, and we do see the orange pushing down, I feel like eventually this negative momentum, this negative push is going to be over, and we're going to continue the daily push to the upside into overbought conditions. And that's the concern here. If you're getting short at the current moment, the question is, do we actually get go for another extension to overbought above the 70% mark, or is it done? Are the bears done? I mean, the bulls done? Are they done showing that strength, and all of a sudden we're going to start rolling over? Really, what I don't like is that we don't have another touch. We need another peak. We got one peak here, and you can see over time we start to use indications of divergence. Do we get any peaks right here? We got these two, not enough. I want a bullish response. I want to see if the bulls can go for that higher high. If there's any indication that we cannot go for the higher high and we cannot get overbought above the 70% mark, you know what? Then we're showing weakness with the bulls, and the bears are coming in and taking the ball in their court. So that's something that we got to consider. But in the meantime, what we have to do is be patient for the orange line to keep on pushing down. Now, the orange line is a great indication that we may need to go down to lower time frames. Okay, so we'll do that in a second. And we do see these EMAs. Are they going to get across? Are we going to get a fake out? It's too early to tell, guys. I wouldn't be front running, the trend oscillator. Let the oscillator, bring you that confirmation. Give me an EMA cross, a red histogram bar. With the expansions coming down like this, it's a good indication we're getting a bit of a pullback, but nothing confirmed just yet. Because if you look at the price action, in fact, we do have a horizontal support. So what are we worried about here? We're worried about breaking below this high, of course, or are we going to use this as support? We're getting very close to the 250 EMA. We did get a crossover there, which is a great indication on the daily, a nice cross on the 20 and the 50 EMA. We are above the 200 daily EMA, which is still super, super bullish. However, a nice back test in this yellow box, in this area, would be great. And guess what, guys? We're getting very, very close. Now, if you notice, everything in this chart is suggesting that we should drop to lower time frames. And the last little while, guys, that's exactly what I did. I got into the lower time frames, and I gave you this warning. I gave you the warning that the fact that we were getting Class A bearish divergence, double tops on the these two tops on the price action, higher highs, as you can see, and then lower highs on pretty much every multi-momentum oscillator that we got here. You can see that this oscillator gives you multiple indications of momentum. You got volatility, you got momentum, and you got expansion. You can see that the expansion came in very, very strong after these divergences. Both volatility, momentum, and expansion were diverging right into this area. Guys, it was actually very, very confluent to suggest a dip here. And guess what? The price action is giving it to us. Now, where we need to really be concerned, obviously, is if we break below this low. That's not a good look, because breaking below this low now makes another lower low, right? And not only that, we start testing these highs. There's a lot of confluence right into this level, which is at about 63,200, give or take. If we can hold that level, that's great. If we can get oversold on the momentum, so back to here, if we can get oversold down into this level, meaning the purple line staying down here, you can see that the orange line is hanging out here at the bottom, waiting for the purple to come down. That's a good look. So let the purple come down. Let's see if we can get to this level, and that's when we can start looking for long positions, particularly if we start respecting this horizontal. We start seeing signs of bullish divergence, and we see the trend oscillator also reverse to the upside, because big picture, right now on the 4-hour, it's falling in the bearish control zone below the zero, right? Below the bottom half. You want the momentum oscillator to stay in the top half. You want the EMAs to stay in the bullish control zone, which means at the current moment we're still pushing down here on the 4-hour. So I'm being very, very hesitant here to front run anything. But you can see that Bitcoin at the current moment is still in a scenario where we're showing negativity. Now, could we come down to this level, get a dead cat bounce, produce that right shoulder, and start calling this head and shoulders formation? It could be very possible here, guys. So be careful. We're trying to get some signs of bullishness still. The 4-hour is still pushing down. All right, guys, let's begin. Let's take a look at Toncoin. Toncoin is one of those projects that unfortunately left without me. And I'm sure that you experienced this in the past. You wanted to get into a project, you liked its fundamentals, and you bought a bit of a bag. You were happy at that point, but then you're like, wow, I should have bought so much more because the project is waking up, there's life, and I missed out on so much price action. And guess what, guys? That's the name of the game. Sometimes you do the right thing and get all in. Sometimes you don't. And of course, you're just trying to mitigate risk, and that's priority, because over time you'll be sustainable. So don't always think about the past. Hindsight is always 2020, guys. So don't worry. So what I'm really trying to tell you is, look, even myself, I do have, let's say, regrets, right? I regret not going all in right into this level, right? I regret not accumulating a huge bag right around this level. So what? Now all of a sudden, we do see that we got a nice expansion to the upside. And if you've been following me here on the channel, I always talk about the importance of identifying an expansion phase, because an expansion phase produces weak spots. Weak spots that we could take full advantage of from both risk to reward ratio or even shorting opportunities. Now, we do see after an expansion, a healthy thing to see within the charts is a consolidation, some sort of structure. After an expansion, you want structure, and then after that structure, you can start producing a setup. Either we're going to continue to the upside after the structure, or we're going to use that structure and then finally start seeing some distribution where we see the price fall right back down through the empty volume gap that an expansion produces. So you can see that we expanded out of this area after an accumulation. The accumulation is evident because of all the volume here, and we've been slowly grinding to the upside, little by little, and then all of a sudden we start breaking this level and we start expanding. Now that we've expanded, and you can see that right after that accumulation, we have an empty gap, we have emptiness, we have weakness right into here. And then all of a sudden right here, after the expansion, we start consolidating a little bit. And this consolidation is bringing in volume, as you can see. And you're seeing that right into the tail end of all of this, we're also getting a little spike of volume, which is important to identify, right? So the question is this volume sell pressure or buy pressure? At this current moment, based on market conditions, we're seeing a bit of sell pressure, I'll be honest. And you're seeing these candles right happening here in the last couple couple of days. They're solid. They're solid candles. They're red candles. They're pushing down. They're breaking bottoms, candle bodies. We're coming down for breaking below wicks. We're coming down to break below this bottom. So this is a very strong indication of sell-off, given that there's a lot of volume all into this, downwards momentum in the price as well. So this is not a good look. However, the invalidation is not clear, or in this case, the horizontal support is not the clearest, right? Because the volume gap actually begins somewhere around this area. And the fact is that because it's not clear, and I'm putting it in a general area, means that there's a level of ambiguity. The reality is the only level of somewhat confluence that we have where we can hunt liquidity is all the way down to about $2.9, $2.90, which means that, look, we could come down for a significant dip. But I also am aware of the fact that we can form structure right into here. We could definitely produce a nice bull flag. So what do we do here? Now, I don't think that this dip is enough. We need another touch. We need a little bit of confluence. I like the 200 daily. It's looking great here as a safety net, right? I'm hoping that we don't fall really deep and have a lot of fear and overshoots. Sometimes that happens. It back tests and it goes like this, and then it stays above the 200, and then meanwhile the 200 is going like that, right? Sometimes it over exaggerates and falls below it, and that swing failure comes back up, and then all of a sudden it consolidates, and then from there we can reassess if there's divergence or whatever's going on, and then sometimes we do one of these and we consolidate, and you know what I mean? So obviously what I'm waiting for is to see the bearish response. The 4-hour that we've been tracking in the last little while is showing us that the bears have been in control on the 4-hour. It's a short-term time frame. It's not a long-term time frame. But where do we put our invalidation of this thesis, right? There's this little volume gap. There's this little volume gap. There's this little volume gap. And then ultimately there's a massive volume gap with this all these little ones fall into. So we have to rest assured that this area right here with this green arrow, let me shift it over, is the area of absolute max pain. This is where a lot of people got in, including myself, with a small bag, right? I want more. So if it comes down here, I know this is a level of where people will capitulate. This is where the weak hands will sell off. This is where it gives us the opportunity to buy people's liquidations. And this is where usually the best risk to reward ratio opportunities lie. Now, it doesn't need to happen, right? It doesn't have to happen. The market doesn't promise you anything. So what we should be doing is preparing for consolidation up here. If it were to happen, it could be a symmetrical triangle, it can be a bull flag, a pennant of some sort. It can be an inverse head and shoulders, cup and handle, Adam and Eve. Whatever you see here is a great indication that we can put a stop loss underneath. Let me make this a little bit more clear. Let's say we come down and we produce something like that, right? Bullish divergence, we get the follow through. We could put a stop loss right underneath here, and then we can accumulate within this inverse head and shoulder. Or we make some sort of symmetrical triangle, which is a nice continuation pattern right into your symmetric. We get close to the apex, but it's all good because we kind of bounce right into here, and then all of a sudden, boom, straight to the upside. All is possible. But just understand, as we consolidate here, you have to expect that the volume will increase right into this level. This will get thicker and bigger, right? And if that were to be the case, you know where your invalidation is. It's right below all that volume. And that's where you would want to put your stop loss in, is if you're going long. Now, if you break below, just understand, guess what? You have a huge volume gap below, and the next area to DCA would be all the way down to about $3, give or take. And I would be going in upon structure, going in a lot heavier and building my portfolio or building my position down here once we build another structure down here, because if the structure is showing us divergence and showing us strength of a recovery, that's where I want to get in. But at the current moment, guys, I don't think that we're going to make massive dips. I think any little retracement down even to the 238 Fibonacci. Let's get rid of this artwork for a second. And let's get these Fibonacci's going. And you know what? Let me get rid of this. I like the viewpoint right here. Let me get rid of that. Let's get rid of this thing. All right, and let's put over this right here so we can keep it clear that so far is quite interesting. Now, if we go from the swing low and use our fib level, swing low to swing high all the way up here, you can see that we have multiple levels. The 0.5 fib, is that great? Is that a good zone? Yeah, sometimes it's good. Golden pocket has a high probability reversal level. If we get down here, we have a bit of confluence with the volume gap here at about $4.50, give or take, $4.40. I would consider DCing. And then if you start looking at the bottom where we're at $2.90 at the 886 retracement, that's a very, very deep retracement. That's, like I said, that's where the best risk to reward ratios are, right? Because you're almost at bottoms, we're almost at the point of control. This is where things start to look less risky. They look very fearful, like in the sense that you can be very fearful because of the deep retracement. But the reality is that you're far away from the top. You're not buying the tops. You're buying a bottom. You're buying previous levels of accumulation. You're buying horizontal support. So ultimately, down here is where I would get very excited to be spamming some buy orders. If we go for a simple consolidation, I wouldn't expect it to retrace further than the 0.382 right here, or the 0.236 right around here is fine, but we already fell right through it. We could get back in and consolidate here, but 0.382 is the furthest I am thinking that we would go to classify it as a structural continuation pattern right around here. And then obviously in confluence with the 200 daily, because as that happens, we want to see the 200 daily slowly creep up and maybe act as some support. And in the meantime, this thing comes up, comes down, comes up, comes down, and we get structure. And then once we build structure, we start putting, stop losses and building positions for a continuation to the upside. And like I said, this will generate some volume. But again, the market doesn't promise you anything. This is very speculative. This is very, very early. Let's take a look at the oscillators here for a second. You can see that Toncoin, with regards to volatility, we're oversold already. The orange line is already oversold, which means that the majority of the move here on the daily should be done. However, the momentum is still pushing down and trying to get into oversold conditions, which means that we are coming down further until we get oversold. I'm not willing to get into any fresh longs until I see this purple line below the 30% mark and I see signs of bullish divergence. That would get me interested, because at the current moment, there's no such thing as trying to catch a falling knife. I'm not willing to do that, and I wouldn't recommend it, right? You want a bit of an indication that we're going to stop here and potentially get a reversal. If there's no indication, you're taking too much risk. So that's one thing that bothers me. We see the expansions, the little expansions in the background here. The red ones still pushing down. I don't like that. Imagine getting into a big expansion here so that we can see the price fall even further. I'm not crazy about it. And then if you start looking at the momentum oscillator here on the daily, you can see that we're still pushing down, guys. Not really a good look. You can see EMA's facing down, red histogram bars, and the expansion, the blue expansion in the background is picking up similar to what happened here. So not a good look on the daily whatsoever on all oscillators, all indications. Everything right now is looking like, Toncoin, it might be coming down. However, we are waiting to see if it's going to form structure, and then we can start coming up with a setup. If we get into the 4-hour, the 4-hour gives you a lot of confirmation as to what's really happening, and the price action doesn't really change, but you can see how negative things look here on the 4-hour, and this is based on the 4-hour dip that we're seeing on Bitcoin, Ethereum, and so on. Divergences everywhere. EMA's facing down, red histogram bars coming in. There's a bit of divergence, but very, very weak. So I'm not really keen on any of this, right? Like, I'm not really crazy about getting involved right now until I see, bullish divergence. Even on the 4-hour, we're not even getting bullish divergence. The oscillator went really crazy here, up and down, while we went into the chop zone. You can see whipsaw price action. This is classic whipsaw. Straight up, straight down. Straight up, straight down. Both longs and shorts got wrecked here in the sideways. This is why I don't like the chop zone. This is why I don't like trading the chop zone, which is when the momentum is stuck in the 50% mark. We can go straight up and straight down and definitely get people wrecked along the way, and then continue going sideways to get people confident once again, right? So this is where we are. We're oversold. It's a good sign, however, not the only sign. We would like to see some bullish divergence in the momentum. We're getting a sign of bullish divergence in the expansion in the background right here, but it's only one indication, and everything else is still somewhat bearish here, including the trend. So we got to be very careful as to trying to front run all of this. I feel Toncoin is a great opportunity if you want to get involved in the Telegram ecosystem. We know that Telegram is a hot platform in the crypto space, and especially as we get into the bull run, it's one of those platforms that definitely has a lot of volume, market participation, and all of that. And the use case and the integration of Toncoin into the Telegram ecosystem is very, very viable. So this is something where it's like, do you want to have a bit of exposure, and when do you obtain that exposure, and how quickly do you obtain that exposure during this downtrend? Guys, DCA nice and slow, because I feel like we could be getting a nice opportunity here, but we need to see signs for it. Let the trade come to you, let the position come to you, and then we'll slowly start DCAing with a bit of confidence. Guys, if I've offered you any value in this video, do the channel a massive favor, slap the like button. It does really help out with the algorithm. If you want to follow me on the socials, the links are in the description below. Feel free to join the Discord, guys. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. Take care, guys. Have a good one, and don't forget, buy the dip.